Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the confusing world of corporate filings. And today, oh boy, do we have a doozy. We're diving into a very important report for a company that just went through a major transformation. Think of it as a company coming out of a chrysalis, or maybe a caterpillar that just decided to become a butterfly overnight. Let's see if this new butterfly can fly. This report, a Form 8K, is filed when big things happen at a company, things that investors need to know about right away. And for Infleqtion, Incorporated, formerly known as Churchill Capital Corp X, a whole lot of big things just happened. They completed a big deal, a merger, and officially changed their name and how they operate. This filing tells us all about that transition. The main event here is the 13th of February 2026. That is when Churchill Capital Corp X, which was basically a placeholder company that had already raised money from investors looking to buy another company, merged with Cold Quanta, Incorporated, or Infleqtion, as it is now called. This is called a business combination, and it means the actual operating company. Infleqtion is now publicly traded through the shell company, Churchill Capital Corp X. We're talking about their common stock here, which is what most people own when they buy shares in a company. Infleqtion now has this common stock out there for the public to trade. They also have warrants. Think of warrants like special coupons. People who held these coupons can use them to buy shares of the company's stock at a set price, in this case $11.50 per S-share. This is important because it means more shares could potentially be created in the future, which can affect the value of existing shares. So what exactly happened? This report explains that Churchill Capital Corp X, which was based in the Cayman Islands, decided to move its legal home to Delaware. This is called a domestication. It is like changing your address and legal registration to a new state. After that, they went through with the merger with Cold Quanta, or Legacy Infleqtion as they call the old company. This means Legacy Infleqtion is now part of this new, publicly traded entity. Before all this, there was also something called a PIPE investment. PIPE stands for Private Investment in Public Equity. It means certain investors put in money right before the merger, agreeing to buy shares at a set price. In this case, they put in about $126.5 million for over 12 million shares. This shows confidence from these investors in the deal. Now, when you have new shareholders, especially those who got shares in a private deal, they usually want to be able to sell those shares easily. So the company entered into what they call an amended and restated registration rights agreement. Basically, this agreement requires Infleqtion to help these shareholders sell their shares by registering them with the Securities and Exchange Commission. It is a way to make sure those large blocks of shares can be sold without causing too much disruption to the stock price. There are also restrictions on when these shareholders can sell. Typically for about 180 days, unless the stock price hits a certain level, like $12 for 15 days. This is to ensure a smoother transition for the stock. Something else important here is that Infleqtion entered into indemnification agreements with its directors and top executives. This is pretty standard. It means the company will help protect these leaders from certain costs and lawsuits that might arise from their work, as long as they acted ethically. It is a way to ensure they can focus on running the company without constant fear of personal financial ruin from business decisions. This section confirms the big news we've been talking about, the completion of this major acquisition or business combination. Now, pay attention to this part. Companies often include a cautionary note regarding forward-looking statements. This is a legal disclaimer. It means that when they talk about their future hopes, beliefs, or plans, they are not guaranteeing that those things will happen. They are saying, hey, this is what we think might happen, but a lot of things could go wrong, and the actual results might be very different. It is them covering their legal bases. They list a bunch of potential risks, like competition, the ability to grow profitably, the cost of this whole combination, and whether their quantum computing technology will actually work as they expect. This is crucial for investors to understand. It is not as simple as saying, we will succeed. This part talks about the actual business of Infleqtion and what it owned before the merger. We know Infleqtion is in the quantum computing space. This is a very high-tech, cutting-edge field. This is another critical section. It elaborates on all the things that could go wrong for the company. For Infleqtion, a big risk is definitely the technology itself. Quantum computing is still very new and unproven for widespread commercial use. They mention the ability to achieve quantum advantage, which is a key milestone in this field. They also highlight maintaining intellectual property and attracting talented staff, which is vital in a tech-heavy industry. Alright, let's get to the money. This section introduces the company's financial statements. These are the numbers that show how the company is performing. They mention unaudited statements for legacy Infleqtion, meaning the company before the merger, and also for Churchill, the shell company. This is where it gets interesting for investors looking at the new company. The unaudited pro forma condensed combined financial information shows what the company would have looked like financially if the merger had happened earlier. It helps give us a picture of the combined entity's financial health. This part is the management's explanation of those financial numbers. They'll talk about why revenues went up or down, what expenses they had, and what they think about their financial future. It is their narrative spin on the raw data. This table is gold for understanding who is really in charge and who has a significant stake. It shows us how many shares are owned by the directors, the top executives, and major investors. We see names like Boca Group Holdings, entities affiliated with Global Frontier, entities affiliated with LCP Quantum Partners, and entities affiliated with Maverick Capital. These are likely the big money players who either invested in the PIPE or were major shareholders before. This section introduces the new leadership team after the merger. Catherine Lego will serve as the chairman of the board. Matthew Kinsella is the chief executive officer and Pranav Gokhale is the chief technology officer. It is important to see who is guiding the ship, especially in a technical field like quantum computing. The report lists who is on the Audit Committee, Compensation Committee, and Nominating and Corporate Governance Committee, which are key oversight functions. It is also interesting to see how the board members are compensated. They will receive stock options, with initial grants that vest over 3 years and annual grants that vest after a year. There are also cash retainers for board members and committee chairs. This shows how the company is incentivizing its leadership. This tells us about how the stock will be traded. The common stock and warrants will start trading on the New York Stock Exchange under the ticker symbols INFQ and INFQWS respectively. Previously, they were on NASDAQ. This move to the nice ice is often seen as a positive step for a company. It also mentions that as of the closing date, there were over 216 million shares of common stock outstanding and over 10 million warrants. The company states that they have not paid any cash dividends and do not plan to for the foreseeable future. This is typical for a growth-oriented tech company that needs to reinvest all its earnings back into the business to develop and expand. This refers back to the PIPE investment we discussed. Those shares weren't registered under standard securities laws, which is allowed in certain private placements. This section details that the PIPE shares were indeed sold under an exemption from registration, primarily under Section C, i.e. the Securities Act. This is common practice for private placements to accredited investors. This confirms that a change of control has indeed occurred. The original shareholders of Churchill Capital Corp. X now own about 24% of the new combined company. This section details the changes in leadership. Key executives from Churchill Capital Corp. X have stepped down, and the new management team of Infleqtion has taken over. This signals a clear transition to the new operational control. They've approved an equity incentive plan. This is a formal plan to give stock options or other equity awards to employees and executives to motivate them and align their interests with shareholders. Similarly, they've also approved an employee stock purchase plan. This allows employees to buy the company's stock, often at a discount, which is another way to foster ownership and loyalty. This is where they talk about the legal structure of the company changing. The certificate of incorporation and bylaws have been updated to reflect the new structure and name of Infleqtion Incorporated. This is a very important point. As of the closing of the business combination, Infleqtion has officially ceased to be a shell company. This is a major milestone for the company and its investors, as it means the operating business is now the public entity. This section indicates that the company issued a press release to announce the completion of the business combination. This is standard practice to inform the public and the market about significant corporate events. This wraps up by listing all the attached documents, including the financial statements for both the acquired company and the pro forma combined entity. It also lists all the agreements and other exhibits that support the information in this report. You can see the merger agreement, the updated company charter and bylaws, and various employment and incentive plan documents. Now, for my take on all this, Infleqtion is playing in the high-stakes, high-potential world of quantum computing. This merger and domestication signal a clear move towards becoming a serious player in the public markets. The fact that they chose the NICE is a good sign for visibility. The leadership team is in place and they have incentive plans designed to attract and keep top talent, which is absolutely critical in a field that relies so heavily on brilliant minds. The initial ownership structure shows significant buy-in from both institutional investors and management, which is generally a positive. However, we must remember the cautionary note regarding forward-looking statements and the extensive risk factors. Quantum computing is still largely in its infancy. The company isn't profitable yet, and it needs to prove its technology can deliver on its promises and find widespread commercial applications. The success hinges entirely on their ability to innovate faster and more effectively than competitors, and to convert that innovation into revenue. Investors need to be aware that this is a long-term play with substantial risks. The company is essentially betting on a technological revolution, and while the rewards could be massive, the path there is full of uncertainty. So, what is the verdict? Infleqtion has taken a bold step into the public arena, aiming to be a leader in a transformative technology. The foundation looks solid with experienced leadership and strategic investments, but the real test will be their execution, their ability to bring cutting-edge quantum technology to market and to navigate the very real risks associated with such a groundbreaking venture. It's a high-risk, high-reward situation, typical of many deep tech companies. What do you think about Infleqtion's future and this big move? Let me know your thoughts in the comments below if you found this deep dive helpful. Give this video a thumbs up and subscribe to Corporate Decoder for more, and don't forget to join our Discord community for more discussions. The link is in the description. Thanks for watching, and I'll see you in the next one.